This month marks the 125th anniversary of the NJCPA. Can't believe we've been doing this for this long. This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing with Sobelco. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, the views and statements expressed herein are my own and not necessarily those of NJCPA or Sobelco. Okay, let's get into some interesting information. I'll try not to look down all the time because we have a different camera going. So the FASB came out with ASU 2022-06. That's the sixth pronouncement that's come out in 2022, right at the very end, December, which is not a lot of pronouncements. You go look at previous years, they're up to 18, 19. So 6 only 1 year really isn't that bad. And I recommend that you go look at the FASB site and you could easily look over all the pronouncements been issued since they stopped putting out FASBs and started putting out ASUs. It's a really good site to look at. I strongly recommend you go there. It's a great resource to have. And also you can sign up for the codification there. There's different levels, but I recommend you go look at their site. Okay, 2022-06 relates to reference rate reform. Now, if you've seen me at other seminars, you've seen Frank at seminars or some of our other A&A presenters, you've heard us talking about this reference rate reform. It came out a while ago where they said that LIBOR, London Interbank offering rate, is going to be going away. And because of that, they needed a replacement rate, so they came out with SOFR, S-O-F-R, Secured Overnight Financing Rate. And with LIBOR going away and you're going to have to replace it with SOFR or another like rate, you're going to have to reflect this somewhere in your financials. Now, what's important is for those particularly that are in industry, if you have loans, and this is where I focus on a lot, it could be in other places, but if you have loans that have a swap arrangement tied to LIBOR, you should be talking with your bankers. If you're a banker and you're lending, and you have loan arrangements or agreements with LIBOR built into there, you should be talking with your clients about it. I actually saw my first loan agreement about a week ago that actually referenced SOFR in there as a replacement to LIBOR, and it said that in there. Okay, but where am I going with this? It was the adoption of this and the transfer was supposed to sunset and take effect December 31, 22. Well, this pronouncement came out in December of 22, and they said, we still don't have everything in place. So they pushed that to December 31, 24. You know what that means? People are just going to be like, worry about it later. I strongly recommend you look into it now because you probably didn't think about it when we said it the first time. You start talking with your bankers now, or looking at the other issues where you have references to LIBOR within your financials. Okay, the FASB came out and talked about, I've mentioned this in previous episodes, and if you don't recall, you can go back and view those previous episodes. They are available, and you can get Nano CPE credit, which I said earlier. They finally came out with the decision on the disaggregation of the income statement. I've been saying this very loosely in the past, and they finally came out with some good information on this. If you're not getting the FASB emails, I strongly recommend you sign up to get them because it's really good. You kind of find out the stuff very quickly as it's coming out. But it's going to require you to disclose the following breakout of expenses. Employee compensation. Now, if you think about it, why am I talking about this? I just said employee compensation. In the past, a lot of companies, I saw this a lot of SEC companies, they put sales, cost of sales if applicable, gross profit, and then they would just put selling general administrative, or general administrative, and they would really group the assets. The expenses to as limited information as possible. The FASB is coming out now saying, okay, we want more disclosure as it relates to employee compensation, depreciation, intangible asset amortization. Now, they say to disclose it, but if you also look on the statement of cash flow, a lot of people have done that, but on the statement of cash flow, it already has depreciation and amortization usually grouped together. I don't know if they're saying you have to say what is depreciation and what is intangible asset amortization. And I know people are already getting tied up. Well, what about leasehold improvements? That's amortization. They're probably lumping that in with depreciation. Inventory expenses, they didn't give a lot of clarification on that. And get this one. One of two things. One, costs incurred that are expensed as incurred, and costs incurred that are capitalized as inventory. Okay. Very little clarification on it as I was reading it. So I'm really looking forward to see what's going to be coming out. But the big one that I saw, because this will impact us, because we see when you go through peer review that people forget to disclose advertising expense. It's right on the disclosure checklist. It's right on our peer review checklist. You're supposed to close the amount of advertising expense. Now they want you to disclose selling expense. And they gave an example, and the example provided said marketing and promotional activities. A lot of times I put that with advertising, but marketing and promotional activities and client relationship management. So they just said selling expenses as described in ASC, blah, 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 blah. But I found it very interesting that they had this. The information when it came out, I didn't see as to effective dates, but I recommend you just look into this a little bit. If you want the connection to a link, I have links, I have printouts all over the place. I'm happy to share it with you. It's public information, so it's not like I'm sharing anything where you need a license required. AICPA had a really nice information that came out recently, and this is for the auditors. Challenges auditors could face in 2023. So I know some people, by the time you listen to this, you're probably in the middle of your audits, or some people might be listening to as they're wrapping up audits. Sorry, go back and just think about this stuff. But here are the issues that they talked about. Risk assessment. I'll give you the sub bullets. It's 4 areas, and I'll give you the other sub bullets in between. Documentation, document identification and assessment of risk and material misstatement and the linkage of work performed. Evaluate design and implementation of internal control. Document inherent risk less than high and reliance on the SOC reports. We'll talk about SOC reports another time, but that's a really big area that people forget. But if you notice what I said 2 times there and kind of made reference to it other times, is document. We all say, and Frank says all the time, document, document, document. Another big area, single audits for those that are handle nonprofit audits or work for nonprofit organizations. This is where they're saying we should be focusing on it's common that might overlook or not put enough emphasis on. Cluster programs, type A and B assessment of the programs, grouping of programs, criteria of a low risk auditee, document testing controls and compliance, document planned sample size for tests and controls. Now, we do a lot of nonprofit audits in our office, a lot of single audits in our office, and I talk to my partners about this a lot. And the areas that concern them the most are identifying the type A and type B programs for testing and determining the sample size. So if you're working on nonprofit audits, and particularly single audit, I recommend that you reach out to people and get some thoughts on what they're doing, because it is a very hot area for peer reviewers. Audit reports, remember SAS 134 came out, so this isn't new because it was last year. And the one thing you do not want to do is have somebody catch you using the wrong report. Ensure that it has all the required content, and make sure you have the appropriate opinion. They put that in there. I was surprised at that because I don't know, I guess going concerns not affect the opinion, but I thought that was interesting. And then they talk about technology-enabled auditing. So they surveyed some peer reviewers, and they found from the survey of peer reviewers that they feel that auditors can improve their audit efficiency and audit quality if they use more technology-enabled tools. It helps you analyze complete sets of data, increase efficiency and effectiveness in the risk assessment, and design appropriate audit procedures. Now you're sitting here saying, Brad, why are you bringing this up and why do we have to think about it? So I'm working on an audit right now, and we have to consider revenue, because revenue is a presumed fraud risk, and that we didn't know really how to test it. I know what everybody does. We're going to select 10. Well, why 10? I don't know. 10's. I had 10 fingers. That's why I selected 10. I didn't feel like doing double the work, so I only selected 5. And that's why I see a lot. Selected 10, selected 5. And there's usually no rationale. So what we did was we had the client give us a complete data dump of their sales, and it wound up being around 1.2 million rows of data in Excel. And we use a particular software, and I was able to identify this whole cluster, 90-something% of the sales were all similar price range. And I was able to say, okay, why are these not within that band? And why are these down here not within that band? And I focus on those 100%, and it wasn't thousands, but focus on them 100%. And then within that big band and the big amount, I then started making a sample within there. But that's what those tools help you for. Trying to do it yourself in Excel, or trying to go into the general ledger and say, give me this one, or give me this one. It's not very effective. You're really not approaching the risk assessment. First thing you have to determine what's the assertion where the risk is the highest. Is it cutoff? Is it existence? The completeness, accuracy, and I can go through all of them. But you should first identify where the risk is and then focus your testing around that. But these tools do help you with that, especially when you have large populations of data. Okay, that about wraps it up. In closing, I'd like to let you know about some upcoming NJCPA events. Learn about ESG and the CPA's role during a 3-hour webinar offered on February 8th or 16th. Register at njcpa.org/events. And registration is now open for the NJCPA Convention and Expo, which is on June 13th to the 16th in Atlantic City. There are a lot of great speakers and topics, including a chance to earn up to 8 ANA credits. And you can also add a 4-hour law and ethics program, which Frank and I are going to be speaking at. We keep pushing it to see if we can do it on the beach, but I don't think the state board is going to let us. And we'll be presenting on that one on June 13th. Go to njcpa.org/convention for all the info. And be sure to join the NJCPA Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.